Hello guys. So there is this partnership question that was going through the 2025 accounting 2 question that I came across, and I decided to solve it with you guys. So just want you to deal with me as I'm going to solve it point by point and also explain it too. So I'm going to take the question, going to read the question, then later on we solve for what they are requiring us to do. So I'm going to read the question. So when you go to the UPAC the virtual site, you can get the question. It's a 2025 question for the accounting too. So when you get there, you will see it. But this one I've written it down so that it will be easier for me to make the reference to the question and also the details. So please stay with me as I'm reading the question. So Adam and Baba formed a partnership in 2019 as a territorial distribution of fast-moving consumer goods, that is FMCG. So below is the statement of financial position as at December 31st, 2021, prepared by the accounting supervisor. So Adam and Baba partners. So this is their statements of financial position as at December 31st, 2021. So that's what you see now. So we have the current, non-current assets. We have land, vehicle, equipment, building. So this is the total for the non-current assets. Then we have the current assets. We have cash, prepaid rent, inventory. We have receivables, and we have provision for that for debt being subtracted from the receivables to get to the actual receivables. And this is the total for the current assets. So when you add both the non-current assets and the current assets, you're going to get your total assets. And we have the current liabilities. We have accounts payables, accrued interest expense, we have accrued salaries, and bank loan. So using the bank loan here means the bank is going to be is like overdraft or something like that. That's why you are seeing it here. Or when you go for loan from the bank, you have to go and pay. So most times you can see the bank at the current liability side because maybe it's an overdraft or it is a loan. So that's the total current liability. Then we have 7% long-term loan, which is the non-current liability. And also we have the finance by. So the finance by, we have capital for Adam and Baba. Capital for Adam and Baba, and this is the amount. Then we have the net income. And there's a net income, and we have drawings. So we are lessening the drawings. That is why it's in the brackets. So the total liabilities and capital is this one. So when you check the total assets and the total for the liabilities and the capital, you see they are the same. This means that your statement of financial position is correct or it has balance based on the information that is being provided. So quickly, I'm going to read the additional information. That one also have a lot of details. So let's pay attention to the additional information. So I'm starting. The financial accounting manager noticed the following errors and omissions. So the additional information actually means that some of the informations or some of the amount or the item were not being introduced when preparing the trading profit and loss account or the income statement or the statement of financial position. That is why they are here. So they are also very important. If you don't get the information provided in the additional information, it will be very hardly for you to be able to solve the question that they are requiring. Okay, so let me quickly get started with the additional information. So the first one is saying that the net income is reported separately on the SOFP, which is a statement of financial position, instead of sharing it between the partners. And I'll come and explain this one, the point number one, when we start solving the questions. And the two is the beginning of the year balances on the drawing account were Adam 30,000 Ghana cedis and Baba 25,700 Ghana cedis. And the three is saying that during the year, each accounting cash amounting to 5,000 Ghana cedis was taken by Baba for his personal use, but this was not recorded. A portion of the land valued at 15,700 was given to Adam to build his personal workshop. And the four is saying that accrued insurance expense of 22,000 Ghana cedis was omitted and not taken into account in determining the net income. And the five, prepaid electricity of 15,000 Ghana cedis was not recorded in the books. So the next one that we are going to read is the terms of the partnership agreement are as follows. Pay annual salary. The first one is pay annual salary of 35,000 Ghana cedis to Adam and 45,000 Ghana cedis to Baba. And the two, after payment of salary, the next 68,000 Ghana cedis of net income should be shared based on beginning of year capital balances. And the three, after 1 and 2, it means after the first one and the first two and the second two. So each partner should earn 6.5% interest on their beginning of the year capital balances. And therefore, any net income remaining after 3 be shared. It means the third additional information when it comes to the partnership agreement. Any net income remaining after the 3 be shared equally between the partners. So these are the additional information that was given, and we are required, A, based on the additional information provided, the additional information provided, determine the appropriate net income for the year. And the B is saying that prepare the drawing and capital account of Adam and Baba. And the C, at the end of the year, the partners admitted Kubura, requiring her to contribute 252,000 Ghana cedis into the partnership. And it went on to say that prepare the profit or loss appropriation account and the statement of financial position after correcting the net income. Properly show how the partner's capital and drawing account should be presented. The final statement of financial position should include the recognition of Kurubare's contribution to the partnership after the sharing of corrected net income between Adam and Baba. So this is a question that was provided, including the additional information and the requirements. So we are going to check it, the requirements one by one, and get everything done. And for you to be able to do all these things, you have to also make some adjustments depending on the additional information that was given. But I think we are going to also do that based on the requirements. Okay, so let's quickly dive into the requirements. Start with the A.